the same amount of money that you can purchase today, you could have purchased a lot more 10 years ago, 20 years ago, 30 years ago. Guys, this silent killer is also known as inflation. Inflation eats away at our purchasing power. Over a year, you might hardly notice it. You will realize that you could have purchased a lot more. We're going to be discussing more of this in today's episode so that you're basically able to retain the same value as you once did 10 years ago, 20 years ago, 30 years ago. On average, whether it is a recession or not, whether you know it or not, inflation increases by about 2% every single year. So you want to know ways that you can protect the money that you have. We'll be discussing this in today's episode. But first, if you haven't met me before, my name is Leon Man. I'm a licensed wealth consultant with Money Assist Financial. What I do, I help hardworking folks such as you, add an additional multiple 6 to 7 figures to your retirement portfolio. I'm able to do this by providing a free, no obligation financial analysis. What this does, it maps out where you need to go from where you currently are. And together, we're able to design the lifestyle that you always enjoy. Basically, it is a free, no obligation analysis. Now, what are inflation-proof investments? Well, inflation-proof investments are assets. Every time the prices increase, the value of your assets or your investments will also go up. And there's a couple of investments that will do such things. The first thing is through stocks, through ownerships. Ownership and stocks is simply investing in a part of a company. See, what happens is that when companies have their costs increase, they will pass this on to us, the consumer, in the form of higher prices. The reason why they do this is they want to protect their profit margins, right? So they want to basically protect their profit margins and increase in value. Now, if you happen to own a part of this company in the form of shares, let's say you want to own a part of Rogers, let's say you want to own a part of Enbridge, for example, then the price will also increase, right? So if you own a part in shares, when their value go up, so does your investment, right? This is like owning equity. And it's not about speculative stocks, or it's not about one-off stocks. It's about consistent, safe, and secure stocks. Think about energy stocks. Think about utility stocks. Think about consumer staples, what you purchase every day. If it's whether or not it's a recession or not, people are always going to need energy. You're always going to need utilities. Think like lights, things like hydro. You're always going to need consumer staples. So you want to purchase safe and secure stocks to hedge when it comes to recession. The second thing is real estate. Real estate is a classic hedge in terms of inflation. When the prices increase, so does the property value, so does the rental income. As a matter of fact, over the last 20 to 25 years, the prices of houses have about tripled in the Toronto area alone, right? So you want to leverage this, and there's two ways that you can benefit in real estate. You can benefit from the appreciation of the asset or the house. You can also benefit from the rental income in the form of cash flow. Now, I'm not talking about breaking the bank. If you don't want to purchase the property up front and own the whole property, you can also purchase fractional shares or purchase it with a bunch of other investors in the form of units. You don't necessarily have to break the bank. And the other way is through REITs, real estate investment trust. It's purchasing a unit much like a share or ownership of a company, right? So real estate is a great way to hedge when it comes to recessions and inflation. The third way is inflation protected bonds. In Canada, we have something called real return bonds. Real return bonds, what they do, they hedge against the inflation. Every time inflation goes up, they also increase their interest payments to us so that we're able to hedge every time inflation go up. The fourth way is through commodities, through precious metals. Think of oil, think of gold. These are the raw materials of the goods and services that you purchase. So every time they increase, then the price of the goods and services will also go up. Now, I'm not too sure you heard about it, but the price of gold have been on the increase now for about a year, and people have been jumping on the gold wagon because it really retains the value in terms of the purchasing power and in terms of the money. And also, silver is going to be following in the footsteps of gold because of the high demand of artificial intelligence and technology. As technology improves and increases, the need for silver is also going to be on the rise, right? So I have a really, really good feeling. Feel free to let me know what you think in the comments with regards to silver being almost like the next goal, right? Now, the fifth thing is my favorite, segregated funds. What I love about segregated funds is that it already comes diversified. So they've already done the majority of the legwork where you do not have to select the funds. You do not have to select the specific investments. It's already diversified across different industries, technology, banking, energy. All you have to do is to select the type of funds that matches your portfolio or matches your risk tolerance. Another thing about seg funds is that they're investor guaranteed. How often do you find that you have investment guaranteed? If you invest $50,000 in seg funds, you're guaranteed to keep at least $50,000, 100%, regardless if the market does poorly or not. How about that for a deal, right? Another thing about seg funds is that it is creditor protected. No creditor can touch you, especially if you file things like bankruptcy. And also, it bypasses probate, right? If something happens to you, you do not have to pay probate fees. You do not have to go through a bunch of lawyers. Basically bypasses the process, and you retain the same value of investments without having to pay taxes on it, for example, right? By the way, if you want to know more about seg funds, feel free to reach out to me. I'll be happy to provide you with industry insights or industry specific funds that are performing well this instant, or check out my website, leonman.ca. So for the most part, I hope you got some great insights. By the way, feel free to subscribe to my YouTube channel. There is no cost to subscribe. Hit the bell notifications every time I come out with a new video, and you will be directed to a new financial literacy video of your choice, or a new financial literacy video. So I do thank you guys for tuning in. Until next time, I wish you guys all the best. Peace and love. Take care.